Check 1, 2. All right, looks good. Hey, how you guys doing? Today is Wednesday, April 21st. I'll check the date. I should know that. 2021. If you're new here, hey, what's up? My name's Evan. This is Fifth Third Trading. I'm going to show you all the technical analysis you need to know. If you ever go on to YouTube, Twitter, Snapchat, all these other things that are apps and, social media sites or whatever it is, and you're like, damn, how did this guy pick these stocks? And then you come back a whole week later and you're like, damn, they're all down. No, I'm kidding. I'm kidding. I'm going to show you all the technical analysis for great mid-cap stocks. First, I'm always on the 180-day 4-hour chart. I stick to that. You need to find your edge. Mine is found there. 2, I'm going to show you supports, resistances, trend lines, patterns, volume profile, EMA lines, RSI, stochastic, and vortex. These 9 things make up my usual technical indicators and really leads to some success. 3, and last and most importantly, this is a show about watch listing stocks. I'm going to show you some great opportunities that I think you can and you should take advantage of if they present themselves. This is not a financial advice. I wouldn't buy all of these. I think if you buy all of these, you're being a bit foolish. I don't condone that. Take 1, take 2 that you really like, research it, and go from there. For my intermediate traders who are really good with the EV stocks, with the the technology, small growth, I'm praying for you. I really hope they come back. I'm not here to throw shade. I really hope that they do come back. My assumption is that they're going to make a move up and they're going to come back down. I don't think there's going to be much volume there. A lot of folks are looking more for big caps and some security, especially in these trying times. We're getting towards the top of the business cycle, towards the top of the debt ceiling here. And the higher we get, the higher inflation goes, the less folks are going to want to put their money in the growth stocks. And the higher the inflation rate, the worse bonds look. Because if you're going to have like a 1% return a year, but inflation's 2%, why would you buy a bond? And so that's going to lead to too many bonds, which can lead to inflation or too much money, which then leads to a more bearish business cycle. That's going to put us more towards financials, real estates, utilities, consumer staples, shit people need, but they're always going to buy. And that's where we're going to focus on this channel. That's how sector rotation works. That's how my mind works. That's where we're headed. And statistically speaking, the sectors I've been focusing have been doing better. So this sounds good to you if you enjoy this kind of content. If you enjoy a full-grown man in his guest bedroom screaming about stocks and probably mumbling more than you guys can even understand me, like, subscribe to the bell notification. It does help a lot. I do appreciate it. If you enjoy this enough, there is a Discord chat. You don't have to join if you don't want to. No hard feelings. I'm just going to be... Why don't you really love me for who I am? No, it's going to be okay. If you don't want to join, totally fine. The group is 350. It's about as big as I wanted it anyway, so we're pretty much good to go. If you want to jump in, great. If not, great. With that being said, 9 tickers a day that I found. Now, I have 1 short. I'm trying to throw some more shorts out there just because I think as we get higher on the S&P, some folks may find that more riveting and they're more bearish. Unlike me, I'm still pretty bullish. That could be helpful to you. I also have some that are above where I'd buy into because then you have a day or two to let it marinate, roast, pick up some flavor, digest it. I don't want you guys to be looking at stuff tonight and then tomorrow it's gone. So a few of these are going to be ready to play in a few days. Some have already taken off a little bit. It is what it is. With that being said, 9 great tickers today. Let's get into it. So as we can see, this doesn't matter, but we can see our picks up here. We could also see, if I can just double check that my head's not in the way. There it is. Not going to edit that out. What's up? We can see that basic materials did the best. Financials came back. That's one of the sectors I would be focusing. Materials are on the back end. We can see that our industrials did fine today. Discretionary did fine today. Energy did fine. Energy showing a lower low, which I don't love. We can see that healthcare is doing fine. Technology, it's okay. We then have consumer staples doing just fine, real estate doing fine, and then comm services always kind of sucks, low key. So, good looking sectors there. Everything's green. You would have put money, you would have made some money somewhere. Hopefully, that's good stuff. Our first pick of the day is ARMX. You're probably thinking, where is the charting? The same joke every day. If you come back, you're probably like, shut the hell up. Valid. We can see that this is our first pick. Let's do the charting together. Our first most clear support is going to be right about here. Our first clear resistance is right about here. So, seeing as ARMX is in the middle, that should give you a hint of, well, I should wait for value or some form of confirmation of where we're going. Our resistances are going to be orange, or ORNG, without the accent there. Our trend line, I bet my head's in the way, but that's okay. Makes a perfect trend line like this. That's beautiful. And as we can see, we're not quite there yet. We're not quite there. I think we have a little bit of time to marinate on this one and let it come to us. Now, you could draw your own trend line. Now, that's kind of a lazy one, right? But if you want to cut through a little bit of price action to make this work, you certainly can, but that's more aggressive than I would tend to do, and not always the best kind of charting. So I think we have a little bit of time to think here. Put our volume profile on. We can see this bounce happen right where the volume line is. So to make it a little bit easier, activate this, bring it down a little bit. That's okay, right? It's okay. We can put our volume profile line right hither. Looking good to me. Redraws the channel. This is where 70% of the volume happens. Being above that's usually a good thing if you're not overextended. And being below that is a good value. So, one shows power, one shows weakness, but a good value. It is what it is. We also have a clear area, the POC. That's gravitational. That's the highest 5 node. This is a B shape. B, boom, boom, boom. 2 big nodes. That's a good bullish setup. So, ARMX, would I buy it today? No, I wouldn't. And that's totally fine. I don't think buying something every single day is a smart thing to do. I think that I think it's a great call. I think long term this makes a lot of sense. You have plenty of upper momentum, plenty of potential, but I like to play the volume and the value. I think there's high volume today. That's great, but I don't want to pay more than like $37.50 for this. That's where I want to put my line at. It comes down here, I'll buy it. If you like confirmation plays, I'm sure email lines are being involved here. Let's check them out. What's super cool about this channel is I do not look at the email lines, RSI, stochastic, or vortex before I do my show. I have no idea what the hell they're doing. I'm going to show you what I see live on camera right now, and you'll see how I see it, a good veteran, and what I'm breaking down live with you. It's pretty cool. So we could see it's bouncing off the 200 EMA line. That would have been your value play. I called it this morning as it looks pretty good. Now it's crossing above the 50. So here's what your play is going to be. You're holding above the 50, so you have a dilemma here. Do you want the first candle above the 50 to hold? Yes. Would that give you less reward and more risk? Yes. So it comes down to how confident you are in the fundamentals of ARMK. You need to do your research. If this is a great company, if they have something coming out soon that would tilt you towards yes or no, take that in consideration. If I was you, which thank God I'm not because I'm me, GOAT, we can see that this is this area I put my stop loss at. $39 is probably fine. Probably closer to $38.90 would be a fine stop loss. It breaks down like this. It comes down and does a lower low than this. Let it go. But next time, watch this. He says get near the 200, you're Gucci. RSI is fair. It gets overbought plenty, so I think you have plenty of room to run up here still, which is a good sign. Stock is low. Curl north below -40. It's exactly what you want to see. Vortex, bulls low, bears high. It's good. It's good. I think that if you would have caught this in the morning, now I was calling bangers all morning, dude. I was on it. I was busy. All the old plays I was talking about, I was on top of it. Mogo was going crazy. It was bananas. So I didn't catch this one until later, but ARMK, make sure it makes sense fundamentally, but overall, it's a good pick for your watch list. Next is CARS, Cars. Cars.com. I bet it's good. This is a beautiful setup. And this is why I kind of don't like triple bottoms or triple tops or double bottoms, because it does this a lot. I think channel ups are way better than trying to go off trend lines or off horizontal lines often. This is a beautiful setup. I love this a lot. Now, this is one that I baked in the cake of waiting. We are above where I want to buy in. I want to buy this at $12.50. This hits $12.50, I would probably go for it. If it's at $12.80, I wouldn't want to. That's not that big of a difference. Yeah, but that's an extra 2% I've just lost. That's going to be almost break even, you know, cushion if it were to go up and come back down. I don't want to risk that. So I think this needs another day or two. Now, the indicators show something else. Sure, we can talk about it. But if this comes down another like 30 cents, perfecto. You can also see that our resistance trend lines, we're making a really nice broadening wedge here. So now we're waiting for a new pattern to form. It has a lower high. So maybe you're making a diagonal triangle here, a horizontal triangle. Make sure your price targets will be reflective of that moving forward. Unless we pull up higher. Now let's duplicate our trend line here. Does this match up? Yeah, you can say it's even a channel. I mean, it's definitely channel-ish. I think this breaking a few times is not bad. I'd rather break up than break down, right? So this is pretty good. I like it a lot. It's showing clear power over the volume channel. It's really doing this up here. A great sign of strength. If we can get the next one of these, I want to capture this. This is what I want. I want this to happen somewhere up here. Will it? I don't know. Can it? I don't know. But I want this. That's what I want. I want a big old push up. But CARS, a beautiful pickup. Let's check the indicators. So this is great. The 200 EMA line is what you guys need to focus on. The 200 EMA line is showing us a clear picture. We can see that the 200 gets broken, you know, every single time almost gets broken. And what's it do? It comes back. So you have options. I think this is a good value. I think a better value is 1250. I think a great value plus confirmation is getting from 1280 to 13. It does that. It recaptures the 200 EMA and it holds. Now you can zoom in to the 30, 20, or 10-day chart. 5 I would avoid. Too quick. But in the 30-minute chart, if it gets like $13, $13.05 and it starts to hold, then we can zoom out and be like, I have some confidence it's going to hold. Now, it comes down to preference. I like to have a full 4-hour candle hold, and then I buy in, right? So that'll be your sign of confirmation of life coming back is when it crosses the 200 and goes up. The 50 seems to be a resistance, but it's not as strong as the 200. It gets sandwiched. You still have very low risk here. That's a great setup. RSI, dummy low, gorgeous. Stock is low, gorgeous. Bulls, they can be a little bit lower. That's what I'm saying. I think that the trend line makes more sense than the 200 for Vortex. We can see it does often get lower or right at it. So I think we have a little more of a dip coming and then we'll turn around. But bears, they're exactly where you want them. So CARS, again, would I buy it tomorrow? No. I think with the market being where it is, my current positions, let them run well and have a good time. If this crosses the 200 like I'm talking about, this gets above it and holds, then cars becomes a great option for me. But overall, watch this nonetheless and watch it for later. Next is CNC. I call it CNC right here. And if you would have bought in, you would have been up a good 13% at one point. That's nice, but let me get rid of this now. This is going to be our only shorting possibility of plays for me today. I don't like shorting. I think bear ETFs make a lot more sense. They're easier to read. When all sectors are coming down and all indexes are coming down, buying like LabD makes way more sense to me than shorting a stock. But I think there's a lot of validity behind it. I think a lot of you guys with put options could use some extra, options out there. Options as in choices. And CNC makes sense to me. One, earnings is coming. Earnings is a good 6 days, math wizard. We also have, last time I had earnings, what did it do? Shit the bed. Hey, we have earnings over here, what did it do? Shit the bed all the way down to it. We're up here again. There's a possibility it's going to run and crash again. Now, there's a possibility it's going to run up before then, so you got to be careful. But this is definitely high, lower high, lower high, lower high. So it's definitely showing some decay. This is a great, 50, if you can get CNC at $58, that's a dub. For sure. So you'd watch this nonetheless. But if we can get a good rundown, it starts crashing into the support 4%. Is it a lot of reward? Yeah, I think an option put would be what 20-30% back on your money. But if you get a full move down of 10% on an option put, in 1 or 2 days you have a good decay rate. That's pretty crazy. So that's really good. I do not short often. It's a bull market, but if you're gonna short something, I called Doc yesterday. Doc was down, and again, this is, what are we doing? This is what, 0.5? Yeah, it's not a lot, but if you would have bought Doc today to short it, tomorrow you can trade like a day trade, and that's pretty good. I think CNC has a lot of the same trappings as Doc does. Let's check the indicators. So we want to see shit being high. This is the opposite. We want to see bulls high on the stock and on the Vortex and such, right? So make sure your mind is switched to shorting for this one. These are going to be supports moving forward. So again, if we do hit the 50 and bounce, that's a possibility, especially the 200. So your short-term price target should be around $63. Get in, get your 4% drop, and call it a day. Was overbought. You know, it's still really high. That's great. This is the only problematic thing I see is that the stochastic is low. You want that to be definitely higher. But, you know, you definitely have some good strength here. Do I see a divergence? Not really. I mean, kind of. Let's see. Yeah, this is actually a very small divergence right here. It's very unnoticeable, but it's there. It's definitely a small one. And so that's a good sign. And bulls are high and bears are low. That's what you want. If you short, great. I'm not the greatest to ever do it. I don't like shorting that often, especially in a bull market. Now, come like October, yeah, we're going to short the shit out of this because it's going to be a insane budget with Biden making his first budget, and that's when that's going to happen. And it's going to be a lot of bickering. Should be really good then. So, CNC, I like it to short, but not my style. But for you guys, I think you'll like it. Next is Cvna Carvana. I respect their company. I was going to buy a car from them, but they also, with COVID, their supply chain got messed up, so I didn't buy it from them, and that's okay. We have two trend lines. Both are very good. This is a obvious one. Now, this is definitely a little bit off because, you know, if you ever mess with the things here, they don't ever really stick the way you want them to, especially if you move them. But that's definitely a nice trend line right there, kind of looking thing. That's good. Like that. Boom. Good. Now we have this more temporary one that I like a whole lot more. So would I buy Carvana here? I wouldn't. This morning I would have, but again, I had better plays to look at. I think Carvana still has room to run down. Another great play that's kind of baked in for some losses. I think Carvana, you have to drop 7% more for me to be into it. So, given the market was red today, I'm still concerned with the market. So you can see a high, a lower high, came down, and you see how we died right here? That should be a bit of a concern. Now I'm not freaking out, right? If we can come down, you know, I think tomorrow we're going to come down a little bit possibly. We may not, but then we come down a little bit, you know, retract like this, and then come back up. Now we can get into Carvana if it's not really at value. So we got to see what the S&P is going to do first to really buy in. But Carvana, again, watch list it. I think this should definitely be a little bit lower. You could have bought in at 254, would have been fine. So give it a day or two, but Carvana into this week, if you do pull back, fantastic pickup. Also, this is where I called it over here before, and it ran up pretty nicely. So I got to get rid of these, but I kept the money for now. So it's looking pretty good, isn't it, Mr. Gremlin? Let's check the indicators. And this is beautiful. We can see that it's below the 200 and the 50. There should be a hard resistance. That's why I can't break above it. If it can't, it comes down to value. Great. BEAUT full. But if it does break above it, what's going to happen? Usually you're going to have some pretty nice spike ups. You get some pretty good run ups. So you can play off of that. If it does break above both, have a tight stop loss because it has to have real power to get above it. But if it does break above this, you know, you can see 2, 3, 4% fairly quickly, and have a nice tight stop loss. You can get 4 or 5% fairly quick. RSI is where you want it. Stochastics where you want it. It's consolidating, but we're definitely on the bulls being lower and bears being lower. Whoever wins this will prevail. So if we see that there's more green tomorrow and it breaks above and holds, Carvana will be a very nice pick. But you gotta make sure you have that break above the 50 and the 200 to really show directional strength. Next is 5, F-I-V-E. I had a member, my Discord call this one. I think he called it right over here. It was a really nice call. I mean, I forget who did it, and props to them. I think they know who they are, but choice call. It was this or was FHN, I believe, but this was a great call. It wasn't. I didn't find this one. Someone else found this one. We're right back in value. We called it over here, saying it looks pretty nice. You would have ran up, made 7%, and we're right back down here again. I don't gotta say too much about this one. The one thing you want to notice is this is pretty cool. I'm going to do this real quick. This is a nice trick you guys can do from the class I'm making. You can do volume profile and go on demand, which is pretty interesting. And you can actually choose a date that was a little bit ago. So like, let's go to a week ago with this one. About a week ago. We can see a week ago, if it wants to load. You see where the POC was? It's down here. The POC is now up here. What's that mean? All that means to me right now is that that FIVE people are definitely willing to pay $195 instead of 110. And that to me is a fantastic sign of strength. So that's a pretty elite move you guys can do. You're welcome. It's holding support, holding trend. You know, you're gonna have a limited amount of reward, 4 or 5% conservatively to make here. You can definitely go above that and keep pushing. But this is a great channel. It's knocking on this resistance, saying let me in, I want to get higher. And once it does that, you can run. I mean, it's gonna be very similar to this, right? Let me over, let me over, let me over. Those are the resistance. Let me go, let me go, let me go. Boom, up the races. That's what we want to really do long term. Let's check the indicators. We can see the 200s value, 50. Again, you can wait for a crossover. If you get above it, great. That's a great sign of strength. You buy in there, move your stop losses up. That'd be fantastic. RSI is fair, stock low, curling. Bulls low, bears high. Again, FIVE, lower reward, but a much lower risk here when you play it correctly. All of these need a stop loss. All of these need a take profit order or an alert at least. And with that, you'll never lose. You'll be much more successful with those things, I think. This is a great pickup nonetheless. Next is Netflix, and I know I don't like calling blue chips, but again, I'm not a hack. I'm not going to sit here and ignore good deals when they come around. I think Netflix right now, long term, is a fantastic pickup. I would have called it last night, but again, I think most folks took notice, and I think it's still fine here. The thing that I'm looking at mainly, which most folks are probably in the 10-day are like, look at this, all this room to make up, and this looks so stupid. This is so hard for me to read. I'm dumb. I can barely read anyways. But that 1 year chart. Netflix has a history on this chart of filling gaps. And you know what they say? Gaps like to be filled. And so we can see often, just like the weekend said, often we have a lot of gaps being filled. Right here. Boom. Gaps up. Gaps up. What's it do? Fills it and keeps living its life. What's this happen right here? Oh, big old gap. What did it do? Came up and tried to fill most of it. And eventually it did get filled. What happens over here? This big old one up here. It came down to try and fill it as best as possible. And also even right here, these two. Gapped up, what did it do? Closed it. Gapped up, what did it do? Gapped down, what did it do? Boop, try and close it. So I think gaps get filled on this chart. Now, they can also act as really strong resistances or supports, but historically Netflix fills its gaps, which is a great saying. So I think over the next month, you may see this gap get filled. And again, it's 7%. Yeah, it's 7%. But what you're trading off for the lack of growth when it comes to like super big growth is consistency. I don't think Netflix is going anywhere. I don't think Netflix is going to ever go bankrupt or tank. I think Netflix in 5 years from anywhere on this chart you would have bought, you will have more money in 5 years. And that's what you're trading off. You're going to get a consistent winner that you can get dividends from. You know, you have a $500 buy-in, you get, $3. It's less than 1%. You probably get 2% returns a year. Nothing crazy, but for a long-term portfolio, which everyone should have at least some long-term holds, Netflix makes a whole lot of sense, boys. It really does. Let's check the indicators. So obviously the 200 and the 50 are going to be above it because it dropped off so hard. Those will be resistances moving forward. And so for your short term, not long term, short term, price targets need to be based off of these. If you're going to be like, my price target's going to be 562, which is valid. I'm sure it's going to get there eventually. Not sure, actually. No guarantees. I'm fairly confident it's going to get there soon enough, right? Short term, these will come down a little bit. These will act as resistances just like they did over here. See how it dropped off and see how they were kind of holding it down for almost a month and a half? That may happen too. Below 30, again, everything else looks good. Netflix long term, it makes a whole lot of sense. I think it's a great pickup. I just think that it makes more sense to me personally to have the long-term mindset or wait for a small pullback to kind of get more towards the 400s and then go from there. But Netflix, you can't miss. Next is PCG. This is a beautiful triangle, and I think we have another day or two. Now, this is going to be super interesting, and this is one that I'm watching because of this right here. On 4/29, there will be a earnings call. P&G&E Corporation, pretty well known. I don't know how it's going to do. Now, fundamental analysis only goes so far. There's some folks who are like, technical analysis sucks, eat shit. And there's other folks who are like, fundamentals suck, kinda, they're pretty valid too. So, Which way is it going to go? Shit, I don't know. But this is a triangle that's been forming for a fairly long time now. And I mean, it's really been forming. And again, you could take this and you could be like, well, is it actually a downward channel? Yeah, I would say it's definitely much more of a downward channel or downward broadening wedge right now than anything. But this overall trend up is much more attractive. And so what's going to happen? I think what we're going to try and do here, and my plan is let it dip. If it does, let it dip. Let it come to you. Let it come to you. We don't get it hasty. It gets down like 1084. Again, worst case, you lose 1 or 2%, maybe 4 if you really want to see it get lower lows. But we want to play this breakout. I'm really hoping it has good earnings and it runs up and does a whole like bada boom, like one of these over here, and get 10%. You're risking 2 to get 10, 5 to 1. That's a fantastic setup. You win 30% of your trades doing that, and you get your price targets, you're still winning. So PCG, more risky. We gotta let it come to us, unless the EMA line says something else, but let it come to us, and when it does, should be a great pickup. Let's check the indicators. So what's interesting about triangles, and what really shows a good triangle and on this time frame is when the EMA lines are in the middle. You see how the 250 are going dead smack in the middle? That's not an accident. That's because the price is going like this between them so regularly, it's making an actual triangle. So it's super interesting to see. They will be resistances moving forward, but again, I'm less concerned because they're really doing what triangles do, going in the middle. Below 30, low. Again, this is a 10 out of 10 when it comes to what I see, but I think we can get a slightly better deal. And I think in this market, yeah, let's not get a false sense of bravado and be like, we did it, boys, we're back, we're killing it. Again, great day. I had a lot of bangers. A lot of you guys, your bags got lighter or your earnings got bigger, right? We made a lot of money, but overconfidence is not the key. Over euphoria is not the key. My edge comes from great values and being patient. And so I'm going to do that. You can buy in and probably be just fine, but I'm going to wait a little bit longer for PCG. I love SMAR, SMAR. I remember this because I saw this move and it came down. I was like, this looks pretty good. And I was really playing up this trend line 4 or 5 times consistently. And I really miss these kinds of plays. PSNL and Surf were the exact same way. UPLD was the same exact way. Those months were fantastic when everyone else was getting the market. And now we have different setups and structures, and that's okay. This is definitely downward channeling to some extent, right? You can definitely see these kind of line up fairly well. That's not an accident here. So I'm hoping my move is that this trend line up, the overall structure is stronger than this downward structure. And we can definitely, take some trend lines and be like, well, let's make in some form of horizontal triangle. Sure, that's fine. Kind of makes some sense. I'm hoping it reverses around here. Then we get to like 60, 50. Yeah, okay. And then it runs up, even hits resistance, 11%. What are you going to be risking? 3 or 4. Great setup. Again, I played this before. I actually called this over here, said SMAR looks pretty good, and SMAR did one of these. So I know SMAR fairly well. This is one that I do know like the back of my hand. I know exactly what it's doing at all times because I'm emotional. I do like this one a lot. So I'm hoping it can do it again for me and not make me look stupid. But I do like the setup a lot. It's a gorgeous pickup. Let's check the indicators. So it's the 200 being a real dick right now, and you can't get above it. Even the 50s being kind of a jerk. So if you really want to be Mr. Brown Nose or No Risk Boy or Girl, once this gets above both these lines, that's going to be your signal to go long. But again, it's that fake out. It said, yeah, let's go, boys, and you're dumb. So I would wait for it to hold above it, but I think this is a great value nonetheless. It's below 30 on the RSI, below negative 40 on the stochastic. It's starting to curl some. Bulls where you want it, bears where you want it. Again, I'm admitting to being more emotional with SMAR because I've made so much money off of it and I made so many plays off of it. But nonetheless, I think it's a great pickup, but you must do your own due diligence. SMAR, I like it a lot. Last and not Schmeat is Uber. Now, what's funny about Uber is that I actually called it right here. This is funny. I called it right here. I said, hey, it looks pretty good. And did one of these, and I sold it, and I was like, I'm a freaking genius. Because it came down, I was like, you idiots. And then I called it again, and it did this, and it showed the red, so I sold it. And then I went, see you later, nerd. And I missed all of that. Which is fine. I mean, I made money, but that's insane. So I I may be corrected and wrong, but I think Uber has earnings coming. I could be wrong, but I think they do have earnings coming in the next week or so. But look at this. Higher lows across the board, looking where you want it. Now, this could reverse anywhere between here and 52.78 or so. It has room to drop, but I think this is a great value play. I personally wouldn't want to pay more than maybe like 55 bucks for this. I want to get a little bit better of a deal. Let it retest this support area. Let it come down a little bit farther and show us some life. And now I did test it, so it starts to curl. Yeah, you can buy in and then maybe use this right here as your stop loss, like this area. It breaks all this, like, it comes up and it breaks all that. Get out and rebuy in later if you want to, but don't be bag holding. Obviously in a ascending triangle, or maybe it's going to be a horizontal triangle. It's hard to tell. There's no real clear signs of anything, right? This is a really good horizontal support, but overall, trend line's great. Big company. Again, I'm sure you should have some confidence in the next 5 years you held Uber. You'd be happy with what you did. So I think it's a good pickup. Let's check the indicators. So it breaks the 200 just to come back. It breaks it, it comes back. Breaks it, it comes back. So you have to make an option here. Not make an option, but you have an option. Buy off a value, which you must set off price action. You choose. Cross back above the 200. Either one of those is fine, but either way you choose, have the plan before you enter and then have a stop loss based off of that and a take profit order based off of that. Make some OCO brackets if you need help. Well, let me know. Below 30, low, again, perfect. This is what you want to see. Uber, check the earnings date, but it's a fantastic pickup nonetheless. And there you guys have it. I'm already noticing that I did not hit the record button, but my live stream is good. What's up, Ben, David, and Tom? Boys. So thank you for being here. I'm glad that that didn't stop. That would have been horrible to have this whole thing go. So I'm not responsible. But there you go. 9 great plays. Again, I'm going to be on vacation because I deserve it. I want to go. No, I actually have a bachelor party in Miami. Any y'all in Miami, hit me up, dog. Let's get weird. But I will not be here tomorrow, which is Thursday. So no Thursday episode, no watch list tomorrow, no Friday review, and no Saturday sector rotation, and then no Sunday watch list. I'm going to be out all weekend. So I bid y'all adieu. I hope you guys are okay. If you need anything, let me know. To the folks on my Discord, I will be available by message, obviously, and just hit me up and at me. But this will be your first weekend without me in a long time. I'm sure you guys will be just fine. Maybe I'll record while I'm down there. I doubt it. I don't want to really be rude, and I want to enjoy my friends I haven't seen in years. So I wish you guys luck. I'll see you guys on Monday. I will do the Friday and Saturday show on Monday. I'll definitely make that up. I can probably fit all those together, hopefully. But when it comes to watch list, you're going to be on your own for tomorrow and Monday morning without me. Good luck. If you enjoy, like, subscribe, hit the bell notification. I do appreciate you guys. I will see you guys later. Have a good week. Ben with the jokes. Well, I'm not going to I'm not going to redo that. We're just going to use this copy and load it on up, boys. Alright, well, if y'all need anything, let me know. I'm sure you will. I appreciate y'all. We'll talk to you guys later. I just don't want the stream to go on forever and then folks are watching, they're confused. Eat a good kitty. Once I had the camera. There you go. Good boy. Twins. But yeah, y'all have a good rest of your week. I trust Ben. I trust you. Locke, Ryan, I trust everyone to do a good job while I'm gone. If y'all need anything, let me know. Otherwise, have a good rest of your week. We'll see you guys next time.